There he is. Eric, welcome back to OZ Pitch Day. How are you?
Doing great, Jimmy. So happy to be here.
Yeah, happy to have you here. I was just mentioning you've been a longtime partner of OpportunityZones.com and OZ Pitch Day dating all the way back to 2020. And today you're presenting Urban Catalyst Opportunity Zone Fund 2, which is a ground up development portfolio of real estate in downtown San Jose, California. Eric, take it away. You've got 20 minutes for your
All
presentation.
right. Thank you, Jimmy. Yeah, we've been working with Jimmy for quite some time. As he mentioned, we were on his very first OZ pitch day. We formed our first opportunity zone way back in 2019. Our attorneys told us we were the 10th opportunity zone in America to create a fund that solicited from multiple investors. That was our Opportunity Zone Fund 1. We're now currently on our Opportunity Zone Fund 2. We've raised over $150 million in this fund, and it's been great. We recently extended our fund raising period until the end of the year. So, good news for investors. They still have time to get in before we close fundraising at the end of this year. A little bit about Urban Catalyst. Kind of what sets us apart from a lot of other opportunity zone funds out there is we're not just fund managers, but we're also the developers of all of our projects. I personally have been a developer for over 20 years. I've done several $1 billion worth of projects. In general, we build large institutional quality and scale projects, so large income producing buildings. A typical exit strategy is selling to a publicly traded REIT or a large private equity group. In 2024, we were named by the Silicon Valley Business Journal as Developer of the Year. We also were named by Forbes Magazine as one of the top 20 opportunity zone funds in the country. So nice getting a little national validation. And by the way, this is a picture of my partner Josh and I. We're on the roof of our recently opened Marriott Town Place Suite in downtown San Jose. This is one of our projects that is in our Opportunity Zone Fund 2, and we'll talk about in a little bit more detail. But it's nice just to kind of, see the great views that we have from that project. As far as our development experience, our partners here at Urban Catalyst, we've done a significant amount of projects, throughout the Bay Area, but really in Silicon Valley and in downtown San Jose. We've done over $5 billion worth of projects. And you can see the heavy concentration of projects that we've done in downtown San Jose. That's how you get Developer of the Year, right? You build a lot of projects in Silicon Valley. Uh, Downtown San Jose, it's one of the best. Well, a lot of folks, third parties have said it's one of the best opportunity zones in the country. When opportunity zones first came out, a bunch of lists, top 10, opportunity zones in America. San Jose was on all of the lists. You can see downtown San Jose, almost the entirety of it is covered by 4 opportunity zones. All of our projects in Opportunity Zone Fund 2 are located in downtown San Jose. And it's kind of interesting um, when we first started Urban Catalyst, our whole plan was to create a real estate equity fund to fund projects in downtown San Jose. And it just so happened that right when we formed Urban Catalyst, the Opportunity Zone program was created, and they put opportunity zones over everywhere that we were acquiring properties to build our buildings. And we thought, well, wouldn't it be great in these private equity funds that we're going to raise, we'll make them opportunity zones and give our investors additional tax benefits associated with the program. The reason why we really wanted to be in downtown San Jose is mainly because of the, overall macroeconomic trends throughout Silicon Valley, all pointing towards downtown as the next place to see development on a large scale. I'll go through the benefits. I'm sure everybody's pretty familiar with them, but it's always good just to, you know, chat about them real quick. Um, the first is, of course, you have to have a capital gains event to invest into an opportunity zone. Here are the 3 most common ways that folks have capital gains events. And then once you have that capital gains event, 180 days to invest into a qualified opportunity zone fund. We just don't want anyone to miss out on that timeline. Make sure they're aware of it. 2 major tax benefits associated with the program. The first is you're able to defer paying capital gains taxes until 2027. I know Jimmy's gone into a lot of detail and is going to go into even more detail about the pending legislation that's out there that's changing opportunity zones, what that means for existing opportunity investors, investors for the 26 and afterwards. I won't go into a lot of detail about it. So for now, this is the law. You're able to defer until 2027. But the real major benefit is that after an investor's money seasons in our fund for 10 years, all of the profits from the fund itself are tax-free from a federal capital gains perspective. Tax-free profits are great. So we're really pleased, really with how this program has turned out and how it's evolving. Our whole plan here at Urban Catalyst, obviously, we're going to build these buildings in downtown San Jose. We're going to lease them up, stabilize them, and then hold them until we get to the end of that 10-year period. And then we're going to sell all of our assets, and that's when we plan on returning the majority of the profits to our investors. And of course, that would then be tax-free because of the program. A little bit about Silicon Valley. I'm sure everybody knows Silicon Valley, has heard of Silicon Valley, but when you see the companies and the economy that we have here in Silicon Valley, it's quite extraordinary. I mean, three of the five largest companies in the world, Google, Facebook, and Apple, have their headquarters here in Silicon Valley. Microsoft and Amazon have big campuses here. Pretty much all of Palo Alto, Mountain View, Cupertino, and most of Sunnyvale is completely full of these larger tech companies. For example, Google takes 95% of the office space in the city of Mountain View, and Apple takes 85% of the office space in the city of Cupertino. In Sunnyvale, Google and Apple combined have more than 50% of the office space. So we really have evolved a lot here in Silicon Valley over the last 25 years, going from pets.com when Google was just a startup to having some of the largest companies in the world with their headquarters here that take massive amounts of office space. They hire so many people. We also get a lot of questions here at Urban Catalyst. Obviously we're in California, and I'm sure folks from all over the country are watching Pitch Day today. California gets a lot of bad press, and I'm kind of aligned with a lot of it, right? We don't like the taxes here in California. A lot of the politics people are really unhappy about. Uh, but what I really care about is the real estate here in California. And the real estate here in California is amazing. And we have had a lot of success throughout our careers building these ground up development projects, and creating positive returns for our investors is our priority. So we're very happy with California and what has been happening in the real estate world of California, if not California at large. Downtown San Jose is really a fantastic place. One of the best things about it, we have over 300 days a year of sunshine in San Jose. It's some of the best weather on earth. Before it was called Silicon Valley, it was called the Valley of Heart's Delight. Here is downtown San Jose. A lot of projects have been proposed in downtown. If all of the projects that are currently in the planning process are already approved or already under construction, if that's all built out, say in the next 8 to 10 years, downtown San Jose will almost triple in size. So you can see all of these amazing planned projects. For Urban Catalyst, our Fund 1 and Fund 2 projects are located there in red. Green is all of the other developers in downtown, and that kind of bluish, purplish color up there on the top, that's Google's giant mega campus that they're planning. And I'll go into a little more detail about that, but it is exciting to see just how much downtown San Jose is going to change over the next couple of years, and we're a huge part of that. Here's my two-dimensional map of downtown San Jose. This black line here, this represents the Opportunity Zone. Our headquarters is right here. We're right next to Adobe's world headquarters and Zoom's world headquarters. Here's San Jose State University with over 35,000 students. It's the second largest university in the Bay Area behind Cal Berkeley. Periodically, they release lists of all these big tech companies where they hire engineers. San Jose State has more graduates going to work for Apple and Google than any other campus in the country. They have increased their engineering program. They have almost 7,000 undergraduates in their engineering program, as it's a huge feeder school for our tech campuses. Here's the new BART line that's running right through downtown. It connects into Diridon Station. This is our giant train station. We already have just a variety of mass transit options that connect into Diridon. It's going to be great getting BART. For example, now on BART, you can get on BART right in downtown San Jose. You can be up in the financial district in San Francisco in less than 55 minutes. I mentioned Google. Google has been a big story here in downtown San Jose over the last 6 or 7 years. I'll give you a little bit of a summary of what they've been up to. They have acquired over 80 acres of property. They spent more than $500 million on those acquisitions. And their plan is to build around 7 million square feet of office and 6,000 residential units. Google says this is a $19 billion 10-year build out. And it's really exciting stuff, right? They got all of their approvals from the city. So far, what they've done is they've gone out and they've demolished most of their phase one and about half of their phase two. They're planning on starting vertical construction on their first components in about 12 months or so. Google, we've met with them a number of times to say, well, why didn't you start construction 2 years ago? There's some bad press about Google, especially coming out of the pandemic, about how they're shrinking in size, when in reality, they've kept about the same office footprint and they're still building out some additional new office space in their second major campus in Sunnyvale. So, first major campus for Google, Mountain View, second, Sunnyvale. This will be their third major campus, but this will also be their largest campus on Earth once complete. We do expect them to do some big things over the next 5 to 10 years as they build out this giant project. And kind of cool for us, we have several projects in this fund that are about 500 yards away from their huge campus. We underwrote all of these projects assuming Google wasn't there. So Google is kind of a nice to have, not a must have in our funds. 4 projects in Opportunity Zone Fund 2. We have 2 projects up here right on Santa Clara Street. This is just a great location. Santa Clara Street is kind of the main drag of the central business district here in downtown San Jose. Our project's right across the street from City Hall. Then we have 2 projects in what we call Downtown West right over here. This is, again, like I said, just a few hundred yards away from Google's main campus. This is our hotel that is already complete. And these are the 4 projects in this fund. So we have the Marriott Town Place Suites, we call it the Keystone Hotel, 176 keys. Gifford Place, this is a senior living facility right across the street from our hotel. Echo, this is a multifamily building, and Icon, also a multifamily building. These are right next door to each other. So combined, we have almost 1,000 units of high rise in downtown San Jose. I'm going to talk about each of these projects individually so that we can kind of do a little bit of a deeper dive. The Keystone Hotel, renderings these days are getting so good, it's hard to even tell that this is an actual picture of our hotel. We opened this hotel in April of this year. It's been performing better than expected so far. It's the only extended stay product in all of downtown San Jose. It's really driven by the convention center, our SAP Center. That's our arena in San Jose. We call it the Shark Tank. It's the second most used arena in the country behind Madison Square Garden. So, and then we have all of the tech companies around. We've already had tours from Facebook and Adobe and Zoom as they are blocking out rooms for the rest of the year. So this has been a huge success for us. We also built it about 12% below construction costs that we had anticipated, and we built it a couple months faster than we anticipated. I'll tell you, it's not often I build a $100 million building and I can say I'm ahead of schedule and under budget, but that was the case with this project, really due to our great team of developers and construction managers that made this happen. Here was our groundbreaking. I mean, obviously, we had the mayor and a bunch of the council members. It was really pretty exciting. We had a lot of fun opening it up, and I'm really happy how it's performing. Gifford Place, again, right across the street from our hotel. This is our senior living facility. This is 169 units of assisted living and memory care. San Jose is periodically ranked the #1 market in the country for senior living, mainly because we have a huge population and we have really high income. So the folks that are putting their parents and grandparents into these types of facilities, they can afford the cost, because these places, they're very nice and they're very good for, our elderly community, but at the same time, they are kind of expensive. So we really like this product type. They haven't built a senior living facility in downtown San Jose in over 40 years. So there's a huge demand for it. This project is shovel ready. We own the land. We have all the entitlements. We have all the building permits. We're really just waiting for the financing markets to improve to start construction, which means interest rates go down a point or so. And we're going to get this one going. Echo. Echo is one of our high-rise multifamily units. Our multifamily projects. It's an apartment building. You can see here's Echo. Right behind it is Icon. So here's Icon. Multifamily in San Jose, we're going to talk a little bit more about it because, man, do we have such significant demand for multifamily. It's also kind of nice. These projects right here across the street, this is Muro Towers. It's a 630 unit high rise. Uh, it is our best comparable. It has the highest rents in the city, at least up at 35 units a month. It's a giant success story. So having a great comparable right across the street always is beneficial for a project because we can really know what we can charge for our rents and expenses. Um, San Jose, as a part of Silicon Valley, San Jose has the third most expensive rents in the country, behind San Francisco and New York. Kind of a little side note, we're the most expensive big city to buy a single family home in America, where our single family home price is around 1.6 million. And this is really due to the fact that, all of California, we have a housing crisis. We just don't build enough housing, just period. And we haven't for 30 years. Silicon Valley, we've created 6 jobs for every housing unit that we've built over that time frame, and that has made it so that uh, there just aren't enough people. I mean, there just aren't enough units for people to live in. It's become such a huge problem that here in Silicon Valley, we figure that if we wanted supply to equal demand, we'd have to build around 130,000 housing units. And we've never built more than 5,000 housing units in a single year in history. So that's how far behind the curve we are. We don't expect that to change anytime soon. A lot of developers, if you're building in one of those cities that has been, massively expanding like Austin or Dallas, you really have to worry about supply and demand. Austin, especially in recent years, has had some issues with that where they've overbuilt. We literally can't overbuild. It's almost impossible. Um, to that point, here's how many units are under construction in San Jose versus some of the other major cities in America. So you can see we just don't build anything. And that's mainly because we're constrained by mountains and water. So we can't build outward. And that means everything's infill development. Infill development means that you have neighbors and politicians that are anti-development, make the entitlement process very challenging. So yeah, we don't build enough. Because of that, we have the highest occupancy rates in the country for multifamily. We've also seen rents go up a lot over the last 10 years. And a lot of other groups are really expecting, and this is from Yardi Matrix, that the Silicon Valley area is going to have the highest annual projected rent growth in the country year over year for the next 10 years. So we love multifamily. This fund is weighted very heavily towards multifamily, and that's just a really good thing for our investors. A little bit about our timeline. So our investment period, as I mentioned, it ends in 2025. So there's some time left to get into this fund. We're really happy to have it opened as folks are always having capital gains events. And the Opportunity Zone program is a fantastic program to invest into to, get those tax benefits and diversify your portfolio out of stocks and bonds. We're going to have events from our assets throughout the whole period. Will also the whole, and that for the majority of the profits to investors. But if you go deeper dive into the works and all the associated program, refinance events, are distributions of debt. And the way that it works, you build a building, lease it up, stabilize it. It's worth a lot more than we built it for. We go out and we get a permanent loan. We take that, we pay off the construction loan. And if there's excess refinance proceeds, we distribute those to investors, tax-free distributions. Cash flow will build up. Interesting things about our fund is we're starting an LLC to our investors in all of our funds, and every year we do. But those losses will be when we'll do an analysis losses we from our the we I call it one of the typically when you sell a piece of real estate, you're obviously going to have to pay taxes on your income. But if you've been taking losses on your assets over the years, which pretty much everyone does, you have to pay back all those losses, and which is called recapture. And Everybody hates that. We don't like it when you have to pay back all the losses you've taken over time. So, really nice thing about the Opportunity Zone program, you don't have to pay back any of the losses. All of the losses that we pass through to you through this program, you get to keep those losses. Uh, Really nice at the end because you might have been using those losses to offset your cash flow. But keeping losses, they roll forward forever. That's a huge benefit. So, not only do you get the tax-free profits, but you get the depreciation recapture that doesn't happen. Just kind of taking a big step back, you're looking to invest into an opportunity zone fund. Everybody has or should have a diversified portfolio. This is just an example of what folks invest into, but it's just goes to show that real estate should be a part of everyone's portfolio as it is a great asset class. Also, just kind of want to give everyone the idea of, kind of the investment return profile versus risk. This is something we look at a lot in our funds, which is, we're ground up development, riskier than other types of investment, but it typically has higher returns than the other types of investment. And then when you combine that with all the benefits of the Opportunity Zone program, it really shines. Um, the benefits, of course, it's really these three things put together, right? You have the benefits of owning real estate, which really is that depreciation you can take on your stabilized assets to increase your losses every year. It's a pass-through entity, so we're structured as an LLC, so we can pass through those losses to you and you get to keep them. And then the OZ legislation, deferring capital gains taxes a couple years, tax-free profits after 10 years, no depreciation recapture. When you put all of these three things together, the Opportunity Zone program is one of the best tax advantage programs that's ever been created in the United States. And hopefully everyone that has a capital gains event can take advantage of it. So Jimmy, that's the end of my presentation. Um,
Perfect. Well, thank you, Eric. We've got time for one or two questions here. Varsha wants to know, Eric, are Echo and Icon, are they luxury units? What's the range of rents on those units?
So those are luxury units. Most new apartment projects, are luxury, and that's mainly because luxury market has a higher margins for developers. It's also because, I mean, even if I built those buildings and I put in, call it like no amenities and the worst finishes ever, they're still brand new. So they're still going to be at the top of the market for rents. A lot of folks care a lot about below market rate housing or different levels of incomes, and we do too. And one of the things that we do in San Jose is we pay a lot of fees and taxes associated with ground up development that go towards below market rate housing. And we're, I guess I don't particularly like paying fees, but at least it's going to a real good cause of below market rate housing creation. But our projects are luxury product.
Good stuff. Couple more questions here. This one from Brad. By the way, for those of you just showing up for our panel discussion on the 2025 tax cuts, that panel is going to feature Blake Christian and Jim Lang. We're going to turn to that panel in just a minute, but want to get to a couple more questions here for Eric. Brad asks you, Eric, do you expect Google to take advantage of the OZ as surely they have capital gains? Do you get a lot of corporate investors like Google?
That's a great question. So, in general, we get private individuals that invest into our funds. Between Fund One and Fund Two, we have over 900 investors. Um, None of them are big corporations. If Google was going to do something like that, they'd probably form uh, their own opportunity zone fund. They're very sophisticated. However, we've talked to Google about that, especially early on when the legislation first came out, and they're just not interested in it at all. They're like, our goal isn't to, save money on taxes necessarily through this program. Our goal is to create the most amazing campus that's ever been built. And I'll tell you, they're really doing that. The things that they're doing for the city are just amazing. No developer would ever build what Google is building because it's not going to be profitable as far as a real estate investment.
Excellent. Let's see. This is a question from Danielle about the new zone designations. Sorry, this one isn't from Danielle. This is from Varsha. Once the OZ 2.0 goes into effect, do you expect San Jose downtown OZ to retain its status as an OZ?
So there are four OZs that cover downtown San Jose, and some of the initial proposed legislation took two of those zones away. So there still will probably be some in downtown San Jose. Whether or not it'll be all four is kind of hard to tell. Um, the two that are being taken away, all of our projects are in those two zones, but we get grandfathered in, so we're not all that worried about it. But um, future funds, we might have to consider whether we want to be in the other zones in downtown San Jose or other locations throughout the Bay Area.
And then we got a few questions we're not going to get to, so I'll put contact information for Urban Catalyst in the chat in a moment. But last question for you, Eric. This one comes from Danielle. She says, "I'm new to OZ Funds. If I make an investment with Urban Catalyst, will I receive distributions annually, or do I only get a big payout at the time of sale in 10 years?"
It kind of is one of those depends. We do anticipate the big payout after 10 years, but during the hold period, we do expect to have refinance events. It's almost assured we're going to have refinance events. Now, will those refinance events generate enough liquidity for us to make distributions to investors? Is kind of hard to determine. When will those refinance events happen is also kind of hard to be determined. If we don't have refinance events, like for example, our hotel has a 10-year loan, 5 years of interest only, followed by 5 years of 30-year amortization. So it's like a mini perm. And if we don't refinance that, the hotel starts generating a lot of cash flow, and that cash flow builds up. Initially, we might use some of that additional cash flow to contribute as equity to start Icon and Echo and Gifford. Um, but as that builds up over time, more than likely we will make distributions to investors, because why wouldn't we? We don't need to build up a significant, amount of liquidity in our funds. We just need enough to operate. So there should be cash flow distributions over time. Again, when will that happen? It's hard to determine exactly when that will happen.
Very good. Well, hopefully it does happen at some point during that 10-year hold period. But Eric, we've run out of time. Really appreciate your support of OpportunityZones.com and OZ Pitch Day. If anybody has any questions for Eric and his team that we weren't able to get to today, I just dropped a link to the Urban Catalyst contact form on their website. Please reach out to them there. Eric, thanks so much. Appreciate it.
Thank you so much, Jimmy.